All right. Hey, everyone. I'm here with Shubha Dasgupta from Capital Land, my favorite mortgage broker.
How are you, Sherif?
Great, great. I didn't finish. I said you're my favorite mortgage broker
Oh,
for today.
okay. I know it changes like the tides, man.
Yeah. So Shubha, let's get right into it. I want to ask you quite a few questions about the market, what's happening with the mortgage landscape. So
Yeah,
first of
please.
all, yeah, tell me what's going on with OSFI. What's happened here?
So with the rule changes, as of January 1st, we saw the new rules implemented with the addition of the stress test, meaning that all mortgage borrowers that are now putting 20% or more down are going to be required to qualify at the greater of the Bank of Canada benchmark rate, which is 5.14 today, or their contract rate plus 2%.
So 7.14.
No, their contract rate, whatever their contract rate is. So, for example, let's say you're getting a 5-year fix today at 3.49%, you'd be required to qualify at 5.49%.
Oh wow! So Shubha, it's February 20th today, and there's been quite a few transactions reported, and I track them on a weekly basis. So things are happening in the market. We're seeing inventory shrink again. How has it affected the buyers coming in? Are you rejecting a lot of applications? What's the trend you're seeing here with the buyers coming to the market?
So it's a very interesting question that you asked, Sharif. And the reason being is that the numbers that we see right now, January, February, possibly even into March and April, are going to be slightly skewed. And the reason why is because a lot of those purchases that are closing now are going to still be under the old rules, grandfathered through because many of them had purchased prior to the rule changes.
Okay.
Some of those clients have not yet been impacted.
Okay.
However, what we are seeing right now with new clients and those that have purchased, post rule change or in the new era, however we want to frame it, they are definitely seeing an impact on how much they're able to qualify for. We're seeing about a reduction of about 20% in qualification, and depending on where and what product the purchasers are looking for, definitely seeing an impact. Single family home, the detached homes. We're seeing less and less consumers being able to qualify for those, which, and I'm sure you can add to this, might be one of the driving factors in why we're seeing such strength in the condo market right now.
Yeah. So Shubha, let's be honest. Are prices coming down because of this? Are we seeing a 20% decrease in prices from the mortgage end of things? From the real estate perspective, we see different trends, but I want to see from your perspective, what are you seeing?
It's very interesting, right? Because price trends don't just correlate with one thing for certain, right? One of the things that we know is that supply and demand are going to have a huge impact on this. And, especially in the GTA and surrounding markets, we have a huge demand for housing.
Yeah.
Massive immigration, people coming here all the time. And, we just don't have enough housing to be able to put roofs over people's head. So
Yeah.
this is always going to dictate pricing on that regard. In terms of qualification, could we see housing prices fall more in line with income levels? Absolutely. We've definitely seen the prices flatten since its peak in March 2017.
Yeah.
Could this be a trend? I think we've probably seen the extent of it already, the majority of it already happening.
Okay.
And I think, my opinion is we're probably going to see a flat line, if not little movement up or down from that line, right?
Yeah. So Shubha, CIBC came out on the news, or actually Toronto Star reported that CIBC is now cutting off foreign investments or foreign buyers purchasing here with the no income approach, with the no income qualification approach. So what does that mean? Does that mean that these foreign buyers or these Canadian non-residents living abroad who are buying properties here, do they no longer get financing? Like what's happened all of a sudden?
Well, there's definitely still options available for those borrowers. People that are buying from overseas and people that are working overseas, are a strong part of our marketplace, especially here in Canada and as diverse a nation as we are in the GTA. So, we embrace people and we embrace immigration here. The one thing that I will touch on is that, if one lender moved away, it doesn't mean that all of their options are not available anymore. There are still quite a few banks offering non-resident financing for those that are working overseas. The majority of them and the better ones do require income. which is the interesting part about the product that's not been or that's been removed recently that you just mentioned, in that was a non-income qualifying product. As it stands today in the market, foreign buyers that have to qualify can use their income from overseas to qualify for a mortgage here, using standard income documentation. So their pay stubs, their pay documents, pay certificates, bank account statements, anything that they can use to verify that they're earning income abroad can be used to qualify for a mortgage here, given that they fit all of the eligible criteria. There are still certain products available as well for foreigners or non-residents that maybe can't verify their income all the way but have high net worths. So certain products that are available where you can allocate, or we call it hypothecate, a certain amount of payments, 1 year typically, so 12 months worth of principal, interest, and taxes. If you hold it in your bank account, then that will suffice for the income qualification standpoint. So definitely still options available. I want to make it clear that we welcome foreigners, we welcome non-resident investors, and we always have solutions to help them.
That's awesome. That's really in depth. Thank you so much, Shubha. My last question to you about what everybody wants to know is, are rates going to continue to increase? Should we go variable? Should we go fixed? What do you think is the right way to go here?
So let's answer your first question. Are rates going to increase? Absolutely. Like we've probably reached a point in the cycle, in the economic cycle, where we're now in a rising rate environment. For the last 10 years, we've seen rates decreasing, and whether they increase rapidly or increase slowly remains to be seen. But certainly, we can say that rates will be on the rise from where they are. I mean, we've been at rock bottom for so long. Borrowing in the 2% range.
So we're going to see like an 18% mortgage or 11% mortgage?
I highly doubt that. I think, the Canadian government and all of the policymakers and the banks and the institutions, pretty much know where they're going to take rates don't know where they're going to take rates, but know that we're not going to see those 18, 19% rates. You think about over the last 5, 10, 15, 20 years, average rates have hovered between 5% to about 6%. So I think being in that range is quite realistic, or getting back to that range is quite realistic in the near future. Maybe not in the immediate future, but definitely in the near future. Talking about fixed versus variable is a very interesting question, because right now there's a couple different factors you have to look at. And one of the factors that you look at for fixed versus variable is actually qualification, how much you're qualified for. So as we discussed at the beginning of this interview, how you have to qualify for the greater of the Bank of Canada benchmark rate or a contract rate plus 2%. Where that really matters is on short-term fixed and on the variable rate. So variable rate mortgages today could be around 2.5%, 2.7%, plus 2%. You're still qualifying at the Bank of Canada benchmark rate, which is 5.14. So what that really means is that those clients getting a variable rate mortgage today are going to be qualified for a little bit more than those that were qualified for a fixed mortgage, which has been the trend for the last 5 years. That's interesting, because if you need an extra $20,000, $30,000, $40,000, you may almost be forced to go into this variable rate product to qualify for it. On the flip side of that, as mortgage brokers, we always look at borrowers on an individual basis and try to define the product that's most suited for them. So am I a believer in variable rate mortgages for everybody? No. I think variable rate mortgages are great for those that can withstand risk, that are at a point in their lives where they don't necessarily have to worry as much about payment fluctuations and things along those lines. But for those that are still new to entering the housing market, that may be greatly impacted by an increase to their payments or an increase in rates, they should really still consider staying with a fixed. One of the things that I'll mention is that if you had to qualify for a little bit less, or a little bit more, on the lesser rate in order to get into a product, variable rates and most variable rates available in the market today do offer you an option to lock in at any point after the time. So if you closed on a on a variable rate mortgage, you could switch that into a fixed rate if you felt that the risk wasn't, correctly assessed for you at the time.
Yeah, and so myself, I got a variable mortgage, and it was at 2.75 that I renewed at, and then the rates increased right away, so we're at 3% already. So somebody like there's a lot of people in my situation. What should we do? Should we fix our mortgages now? Should we just let it ride variable because next month we're going to see another 0.25% increase?
Yeah, those 0.25% increases add up quite a bit, right?
Yeah.
And before you know it, your 2.5% could quickly become 3.25%. The thing about locking in is that it's very difficult to time the lock in, because by the time you know that the Bank of Canada is going to increase their overnight lending rate or the banks are going to increase their prime, typically the fixed rates, which run on a different plane than that, have already increased. So you almost have to catch it well in advance and be willing to say, you know what, in anticipation that rates may be increasing or we may be on this upward trend now for rates, I'm just going to pay a little bit higher right now and hope that it evens out over the term of the mortgage. Again, it really depends on individual situations, what your cash flow is, what your objectives are, and what you're looking to accomplish.
Perfect. Shubha, I want to thank you so much for your time today. I think we've covered quite a bit. I really appreciate it. And remember, if we have any questions for you, where can people reach you again?
Absolutely, Sherif. It's my pleasure. Anybody can reach me at 416-669-2046 or at shubha@capitallend.ca.
Awesome. And I'm Sherif Nathoo with Century 21. You can reach me at 416-274-1513. And you can email me at sherif@thesnteam.com. All right, everybody. Have a great day and happy Tuesday.
Thanks, Sherif.
Ciao.
Bye.